It's Quant Trade Edge, and today I wanted to look at some alternative trigger points. So, as you know, in our main 4x pattern, we look for days in which the direction is changing. So, for example, these are technically all up bars based on the Gann count. This one, 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 this one. And then a break below here is when we look for the 4x trade to the downside, for example. Or here, and this you could think of as an alternative point. It's a ID2, an inside day. A break above there, we would look for a 4x to the upside. Same thing here with an inside day. Now, I wanted to, so one, this sets up a good potential 4x trade to the downside tomorrow. So far, we've only tested an equal low, 31.50. We haven't actually broken below it. But I wanted to show you how this works in other ways too. For example, on a weekly chart. Coming into today, today was Monday. Last week's high was set Friday afternoon, and it was 5048.50. And you'll see that actually, I think, there we go. I think it's actually this right here, 5048.50. And you'll see that we broke through that 9:45 in the morning. And then we came back in the afternoon and we dipped below that level here at 12:42 and 12:44. And then what happened from there, and this is a 2-minute chart, we had a very clean A, B, C, and this was our risk bar that was 2.25 wide, and down to the bottom we got 8R from that ABC. So instead of using a prior day high or a prior day low to trigger us, this was the prior week high that triggered us. Another example could be looking at the NASDAQ. Now here on the daily, when we broke above, so in this situation, we're in a string of uptrends, up days, and we're just taking out another high on an up day. We're not changing direction per se. And what happened here, and this was on a 1-minute chart, don't know if I could find my line. There it is. So we broke above it at 9:52 in the morning, a little bit after we saw S&P break its previous high, but then we got a very clean A, B, C. And again, this is a hoagie here where these 3 bars are inside this bar, so we don't count the jiggle within there. But this is an ABC, and it had equal lows. This low was 18.063.25. This was also 63.25. So in this situation, we had a risk bar right here, this risk bar, which was about 575 in size, and we got about 9R to the upside here off of that risk bar. And it all happened pretty quickly too, and this is, from 10:12 to 10:38 in less than half an hour. You made 9 times your risk. And it all just starts by taking out a significant level. That significant level can be prior day high, prior day low, prior week high, prior week low. When there's a trend change, and like in this situation, there wasn't a trend change. And so, I was just reading the latest Market Wizard book where they interviewed Peter Brandt, and he was saying that back in the 80s, technical chart patterns just went. There was no problems with them. very little false, false breakouts. And he said now what happens is there's always increased volatility because of the algorithms. There's a lot of increased volatility whenever you take out a point. So, a point like previous day high, which is significant, we take it out and then you have to shake people out, or at least try to shake people out. And that's what I believe these ABC patterns are. That, if it was easy as buying this and not taking any heat to go make, a lot of money, everyone would be doing it. And, for the algorithms to be able to accumulate positions down here, they have to scare somebody out. And that's what I believe they do with the ABC. And that's also why I think that they typically, your C goes below your A to really stop out people, that use that first level as their stop. But, we can anticipate that volatility and use it to get a really good entry like we did here on this 1 minute NASDAQ chart that got us the 9R, or like on the S&P chart that we showed you, or like in our traditional patterns that we do. So again, setting up for tomorrow, if we are to take out this previous day low of 17,911 and a quarter, that would set up a 4x trade to the downside in the NASDAQ. On the S&P, we have the same thing, but the level is 5031.50. And on crude oil, we've already taken out the prior day high. And I like this pattern because we've had this strong impulse, an attempted down bar. It only lasted for part of one bar, and we spent most of the pit session rallying. And if we take out this high of 77.09, which we already have by a couple of cents, I would look for some sort of pattern to form here now. Given that this got taken out right on the reopen, I'd look at a minimum of a 30-minute chart, perhaps even a longer chart like an hourly, and it might be something that happens closer to European Open. But yeah, I don't see anything clean just yet on this. This is a 30-minute, and that's not clean. 60-minute, we would need another leg down. But anyway, we'll keep an eye on that tomorrow. Anyway, have a good night. I just want to emphasize how repeatable this methodology is. And the key is to be patient and wait for a key trigger level to be taken out, and then find the ABC. It's as easy as finding the ABC. And, today we were looking at, just in the S&P 500, from the opening bar, which was here, they're really, perhaps you could call this an ABC, that led to this upside. But again, the key is when you have a impulse down, that's when you want to find your ABC. Here, it was on the 2 minute, there was an ABC. That's what I showed you earlier. But then here, after this push down on the 5 minute, there was an ABC, and this would have been your risk bar for that. So this was one of the trades that we did call out live in the in our Discord. It made 1 to 2 R's down here. Technically did not stop out, so you got all of this here. Or you could have looked at this as another setup of an ABC. It was here, then this one went lower, and then here. These are both outside bars because they this one's an outside bar, so it takes the same level. So you could have either treated this as a new ABC or a continuation of the existing ABC, but this also did another couple of R's to the downside. So, these patterns are everywhere. Be selective. Just take the best ones. The ones where a significant level is being taken out is obviously better. And just stick with it.